Finance is fundamentally meant to serve the real economy, but for a long period, our financial sector has been overdeveloped, with excessively frequent trading and rampant arbitrage, ultimately resulting in insufficient support for the real economy. The financial sector lacks the ability to empower the real economy. It does not possess the people-oriented quality needed to support the development of the real economy, improve people's livelihoods, or enhance social welfare. From this perspective, we could even say that the financial industry has become distorted. On one hand, China faces serious structural financial heterogeneity. On the other hand, since 2012, the degree of financial liberalization has become excessive, and in some areas, the level of financial deepening and liberalization has even far surpassed that of the West. This is especially evident in the excessive boom of financial arbitrage and idle transactions, compounded by excessive money supply, a rapid decline in returns on real economy investments, and insufficient financial support for the real economy. This is particularly reflected in the way shadow banking, derivatives, and related markets have aggressively eroded the profit margins of the real economy, squeezed the survival space for real industries, and led to the current situation where the monetary policy transmission mechanism is obstructed and has basically become ineffective. Personally, I strongly disagree with, and even deeply dislike, the previous model of rapid, low-quality development driven by arbitrage. It's basically a blatant money-grabbing mentality, where the market operates on the reckless logic of as long as we make a killing today, who cares if disaster strikes tomorrow? So, from the bottom of my heart, I support the government's strict crackdown on the chaotic financial markets, emphasizing that the financial industry should return to its true nature as a service industry, serving the real economy and improving the welfare of the people. From this perspective, it's only natural that finance should serve the people. There are two types of transactions, and those conducted in the capital market are actually what we call a zero-sum game. Your gain is someone else's loss. These kinds of transactions don't contribute much to economic growth, and can even have spillover effects, triggering things like the money multiplier effect and the wealth effect. But real industry is different. Real industry increases GDP, improves citizens' welfare, and boosts output. It has genuine, positive value for economic growth. The two attributes of financial markets, investment and speculation, aren't inherently opposed to each other. Instead, they coexist and are interdependent. The capital market needs investment, and it needs professional institutions that invest based on fundamentals and long-term development. The market also needs speculation, because speculation objectively increases market activity. However, we need to recognize the power of finance, that is, inclusive finance, financial depth, industrial finance, or what could be called the industrial nature of finance. At present, the extent to which finance has returned to its essential role as a service industry is still far from sufficient. Finance remains a highly profitable sector, and that is definitely problematic. We can look at the financial industries in developed countries and observe the salary levels of their employees. Except for Wall Street, professionals in the banking industry and similar sectors are generally at a middle income level. The purpose of its existence is to provide society with financial transactions, intermediary services, deposits, and lending services. It was originally supposed to be a low-profit industry, one that fits the characteristics of modern service industries and participates in the process of profit equalization across the market. The reckless, live-for-today attitude of the past, jumping in today and cashing out tomorrow, playing games like musical chairs, was fundamentally wrong, and that's why it led to a decline in the return on investment for our real economy. When finance becomes detached from the real economy, when the virtual economy becomes overly developed, and when the cost of financial shocks is too high, that's finance invading the real economy and industries, taking away a share of the market profits that never belonged to it in the first place. The goal of patient capital isn't to make capital passively invest for the long term, but to actively drive capital to support the development of the real economy and real industries, so that the return on investment in the real economy can once again reach the highest level in the market. If blue-collar workers across the country can earn wages that allow them to hold their heads high and reach a middle-class standard of living, then our consumption and domestic demand will be in a healthy relationship, and our consumer environment will truly be stimulated, not just the incomes of people in the financial sector getting higher. Finance has indeed played a huge role in China's economic development, and in the future, it will definitely play an increasingly important role. It will serve the real economy even more and return to its true nature as a service industry, because the core of finance's people-oriented nature is to support and empower the development of real industries.